Hi everyone, good morning and welcome to today's morning report on Monday the 15th of September with me, Richard Perry, market analyst at Hantech Markets. These European markets have started fairly much on the back foot, and that's come with a weak Asian session driven by some pretty disappointing Chinese industrial data. The industrial output was pretty weak overnight, missed expectations, and the Asian markets were down also on the disappointing session close that we saw on Wall Street on Friday. That close down on Friday meant that Wall Street fell for the first time in 6 weeks on the week, and it's just filtered through to this early trading in the European session. So there's some significant uncertainty as to how these fundamental data flows are going to go this week. There's some big events. You've got the FOMC meeting and also this Scottish independence vote that markets are rather concerned about. So the traders are starting a little bit negatively in terms of mindset. The safe haven trades such as yen and the gold price are all performing fairly positively, and that comes despite the strong dollar that we've seen again today. So dollar is slightly higher again, but these safe haven assets that tend to not perform so well when the gold price, so when the dollar is trading strongly, are actually higher today. That just shows that traders are slightly on the negative side today. But this dollar index just moving sideways on a gradual basis over the past few days now, but certainly consolidating that move that it had recently. You've got the industrial production for the states out today. There's no major move that's expected on this number. It's forecast to come in at 0.3% on the 0.3% on the month. If it ever comes up, there we go. So that's just slightly lower from the 0.4% that we saw last month. But the interesting thing also will be the capacity utilization, because the Fed does look at this number. Forecast to come in at 79.3, so that's higher again on the last month's data. So that number continues to improve, and all the economic indicators that we're getting out from the states recently are suggesting that the Fed may well come out on Wednesday and start to alter their forward guidance, especially considering we've got the upcoming end of the tapering program. So that could well happen this week, but certainly at the moment we're a little bit negative in terms of trading. Now, my chart of the day is going to be euro yen. The euro yen has actually just started to come down a little bit, but on this daily chart, we've had 5 strong days in a row. Look at all those days you've had there, and you've had also the breakout above 138, which 138 was a key resistance within the last few months, having been old support, turned into new resistance, and it's now broken out to the upside above that. So that's a strong move. It needs to continue that move above the 139.27 though, and it's just slightly turned back below that. 139.19 was the high on Friday. Again, met with the move today as well. So slight bit of a correction, but if you can see that support build above that 138, I think that would be considered to be a positive move. You've seen this RSI getting up to levels that we've not had for several months, 5 months on the RSI. Also, the MACD line's going positive for the first time in 4 months. So these momentum indicators beginning to turn around. There is the overhead resistance that needs to be taken out, but certainly if we can begin to form support above that 138 level, then that can start to get a gauge of whether we're going to be positive or not. That 138 resistance is shown on this intraday hourly chart that we've got here. Sorry, 138 support is shown on the hourly chart, but if you can start to form support above that, around 138 towards 138.40, I think would be a decent area for a possible buying opportunity if you do get that support forming in the next day or so. So I wish you good luck in your trading on the euro yen chart today, and I will speak to you later. Thank you.